Time now for Options Corner. Joining us to take a deep dive into the chart is Rick Ducat, lead market technician. All right, Rick, take us through the trends you notice in this chart.
Yes, AMD for a while was the laggard among this chip maker group, but now you can see it's stronger than the SMH semiconductor sector, which is stronger than the XLK tech sector, which is stronger than the S&P. So you can see it's kind of one of the strongest of the strong at this point here. And when we do look more closely at AMD versus its competitors, we can see AMD and Intel are the standout companies here. Meanwhile, NVIDIA and Broadcom are the laggards relative to the group here, kind of showing the cyclical nature. The two that were underperforming are now the leaders, and the two that had the outsized gains already are somewhat moderating now at this point here. Nevertheless, as we look more closely at AMD, what we can see is a sideways trend here that we had first the ceiling around 267, our initial high point. We failed to overtake it on both an intraday and closing basis recently. Now we've retreated near 235. That was around where we saw notable highs and lows repeatedly here, so that gives us a supportive area to consider going forward. We can also see that we had a notable low point here around 203 or so. That's around where price held on several times here, grinding out gradually higher lows. When we do look at our other studies here, we can see that our moving averages that we follow, our weekly 5-day EMA in dark blue, our monthly 21-day EMA in teal, those are kind of the bookends for yesterday's price activity here. Those come in at 246 and 236 respectively here. So again, a couple of short-term boundaries to consider. Meanwhile, our quarterly yellow 63-day EMA comes in down near 223 or so. RSI trending lower, just kind of what you might expect heading into a known event risk situation like earnings. Nothing really too terribly exciting happening in that regard here at this point. Finally, when we look at our volume profile study, we can see the notable nodes, the heavy trading areas, come in here near 220, near 240 and 260. So those are the most important areas from the perspective of trading activity. Finally, when we look at our option expiration for February 20th, right here, roughly a 14% plus or minus move is expected for that February 20th expiration 17 days out.
All right, thank you, Rick. That's Rick Ducat, our lead market technician. Now take us through an example trade is Tom White, co-host of Fast Market and senior options contributor. So Tom, what's the approach you want to take for an example trade?
Has gotten elevated into this one going into the report. As Rick mentioned, it's topped off around that all-time high of about 267 a couple times. So I'm using that in the build-out of my strategy that I'm looking at here. The option market pricing in about a plus or minus 7% move in the shares post-earnings on a one-day anticipated move. So implied volatility levels elevated. That allows you to collect more premium on selling strategies. So I looked at something that's neutral to bearish, that gives me that cushion up to about that all-time high. Maybe that becomes another area of resistance for a third time. So I went out to the February 6th weekly cycle, so just 3 days to expiration. This is a pure earnings play here in AMD going into this report. And I'm going to look at selling the 265 strike call. That's out of the money. The stock looks like it's going to open up here about 251. It's up a little bit on some news that maybe OpenAI is looking at alternatives to NVIDIA. That fits the mold here of AMD. But I'm going to sell that 265 strike call out of the money to the upside, and then against it, because we want to stay risk-defying going into earnings, we're going to buy the 275 strike call. So a simple short $10 wide, neutral to bearish, call vertical. You're going to collect roughly a credit of about $2.20 on that if the stock opens up here about 251. That's what you can make on this trade, $220 per spread with about $780 in risk, but that's all the way above 275. So you've got that cushion up to this break even at 267.20 of about 6.5% above where the stock looks like it's going to open up here. We're looking at that all-time high of about 267.08. This break even just above those levels. So if you think, hey, maybe the stock's going to pull back, the bar's too high on this one, or at least consolidate, or you can be wrong and the stock goes higher, you just want it to remain below that break even at 267.20. You got a probability of that short 265 strike that you sold in this strategy of being out of the money of about 73%. So higher probability of success. That's the trade-off versus the risk reward.
All right, thank you, Tom.